Life insurance. It's one of those financial products that everyone has heard about, and many people feel guilty for not having. But here's the truth. Not everyone actually needs life insurance. For some Canadians, life insurance is absolutely essential. It can mean the difference between a spouse keeping their home or losing it, between kids finishing university or dropping out, between a family business continuing for the next generation or being sold off just to pay taxes. But for others, life insurance can be an unnecessary cost, tying up cash flow that could be invested or used for other priorities. So the real question isn't, do you need life insurance? The real question is, do you personally need life insurance? And if so, how much and what kind? Hi, if you're new here, my name is Elizabeth from Boss Budget Labs, and I work with Canadians, business owners, professionals, and families who want clarity on how to protect their wealth and plan for the future. In today's video, we're going to break down who actually needs life insurance, who doesn't, and how to know if it's the right move for you. If you find this valuable, don't forget to like, comment, and subscribe for more expert financial content. Part 1. What life insurance really does. At its core, life insurance is simple. It provides a tax-free lump sum of money to your beneficiaries. If you pass away, that payout can be used for almost anything: paying off a mortgage or debts, covering everyday living expenses, replacing your income so your spouse or your kids don't struggle financially, funding education costs for children or grandchildren, keeping a family business running smoothly, covering estate taxes so assets can pass to heirs intact. Think of it as a safety net. If your family relies on your income, your work, or your financial contributions, life insurance is there to replace that value if you're not around. But here's the key distinction. If no one relies on you financially, you may not need it. Part 2. Who absolutely needs life insurance? Let's start with the groups of Canadians for whom life insurance is usually essential. Number 1. Young families with dependents. If you have kids or a spouse who depends on your income, life insurance is critical. Example, Sarah and Mark are in their mid-30s with 2 young children. Mark earns $120,000 per year. Sarah is on parental leave. They have a $600,000 mortgage. If Mark were to pass away suddenly, Sarah wouldn't be able to keep up the mortgage and daycare costs on her own. But with a $1 million life insurance policy, she could pay off the mortgage and still have funds to cover child-raising costs. Number 2, single income households. If one spouse doesn't work or earns far less, the higher earner must have coverage. Otherwise, the surviving spouse may be left scrambling. Number 3, business owners with partners. Many business owners underestimate this. If you share ownership with a partner, life insurance funds a buy-sell agreement. This means your partner can buy out your share while your family gets fair compensation without having to get involved in running the business. Number 4, individuals with significant debt. Debts don't disappear when you pass away. Mortgages, lines of credit, and co-sign loans all need to be paid. Life insurance ensures your family isn't forced to liquidate assets or sell property just to cover liabilities. Number 5, those with estate planning needs. High net worth Canadians often use permanent life insurance to cover the tax-built death. For example, if you own a cottage, an investment property, or corporate shares, the capital gains tax could be in the hundreds of thousands. Insurance provides liquidity so your heirs don't have to sell assets at a bad time. Part 3. Who may not need life insurance? On the flip side, there are Canadians for whom life insurance isn't always necessary. Number 1, single with no dependents. If no one depends on your income, you may only need a small policy to cover funeral costs. Number 2, retirees with strong assets. If your investments, pensions, and CPP OAS already provide more than enough for your spouse, life insurance may be redundant. Example, a couple with $3 million in liquid investments and no debt doesn't need life insurance for income replacement. They can self-insure. Number 3, those with passive income streams. If you have rental properties or dividend-paying investments that cover family expenses, insurance may not be a priority. The key idea is this: Insurance replaces value that would otherwise be lost. If there's nothing that needs replacing, you may not need it. Part 4. How much insurance do you actually need? A lot of people are either underinsured or overinsured. The right amount comes down to a simple formula. Debts plus future obligations, existing assets equals coverage need. Example, $600,000 mortgage, $200,000 estimated child expenses, education plus living, $100,000 in other debts and obligations, minus $250,000 in existing savings. This family would need around $650,000 to $700,000 in coverage. It's not about buying the biggest number you can. It's about filling the actual financial gap. So term vs. permanent insurance. Now let's talk about one of the most misunderstood parts of life insurance. Should you get term insurance or permanent? Term insurance, think of this as renting coverage. You pay for protection for a set period, 10, 20, or 30 years. It's affordable and ideal for temporary needs, like paying off a mortgage or raising kids. Example, a 35-year-old parent can get $1 million of 20-year term coverage for the cost of a couple of coffees per week. That coverage lasts until the kids are grown and the mortgage is mostly paid. Permanent insurance. Permanent insurance is like whole life or universal life. It's more like buying a house. It lasts for your lifetime and builds cash value inside the policy. This makes it far more expensive, but also far more strategic. It can be used as an estate planning tool to cover future tax bills, a way to transfer wealth, tax-free to heirs, even as a corporate strategy where business owners build tax-sheltered assets inside the corporation. An example, a business owner in his 50s holds $1.5 million inside his corporation. He knows that when he passes, there will be a massive tax bill on the shares. By buying a permanent policy, he ensures his estate gets the liquidity needed while the corporation can continue smoothly, which is right for you. If you're a young family with debt and kids, term insurance is almost always the best fit. But if you're a high net worth retiree or business owner with estate concerns, permanent insurance may be essential. For many Canadians, a combination works best. Affordable term insurance for short-term needs, plus a smaller, permanent policy for long-term estate or tax planning. A common misconception, I'll just invest the money. Instead, investments grow over time. Insurance protects instantly. If tragedy struck tomorrow, your investments wouldn't have had the chance to build. My work coverage is enough. Group insurance usually ends when you leave your job or retire, and it's often much smaller than what's actually needed. I'm healthy, so I don't need it. Insurance isn't about health. It's about financial security. In fact, buying when you're healthy locks in the lowest rates. It's too expensive. Basic term insurance can be surprisingly affordable. For most families, the cost is far lower than they think. How to decide if it's right for you? Here are 3 simple questions to ask yourself. Number 1, would someone be financially impacted if I passed away tomorrow? Do I have debts or obligations that would outlive me? Do I want to leave a tax-efficient legacy or protect assets like a family, business, or cottage? If you answer yes to any of these, life insurance deserves a serious conversation. At the end of the day, life insurance isn't about you. It's about the people who would be left behind. For some, it's essential protection. For others, it may not be necessary, or at least not right now. The key is to base the decision on your actual financial obligations, your assets, and your long-term goals, not on blanket advice. And remember, the right policy, structured properly, can protect your family, your business, and your legacy in ways few other tools can. If you're unsure whether you need life insurance, or if you have coverage but aren't sure it's the right type or amount, book a time with me using the link in the description below. Thank you for listening.